Before the sun rose on January 27, 2026, nearly 20 elite directors at America's powerhouse bank were jolted awake by a notification that signaled the end of an era. The message header was chilling. Urgent precious metals. Exit strategy commencement, no exercise, no test scenario. This was an immediate mandate from the Internal Stability Department to halt all bearish bets and start a massive recovery phase. Everything I'm revealing today hasn't hit the major networks like CNBC or Bloomberg yet. The global financial press is maintaining a deafening wall of silence regarding these events. Once you grasp the contents of this confidential file, the reason for that blackout becomes painfully obvious. Welcome to Commodity Advisor. Please subscribe immediately because this specific intelligence is often scrubbed from the internet. Leave a reaction saying uncovered below so I can see who is truly watching. Let's dive deep. Look, you must comprehend the sheer magnitude of this situation because the data within this unauthorized release is so massive, so beyond normal experience, that your psyche might instinctively dismiss it. Per this internal report, the institution is currently burdened with a net bearish silver bet totaling roughly 6,200,000,000 units. Let me provide some context for that figure. Every single extraction site across the entire globe manages to produce roughly 820 million units annually. The paper market is a cage with a broken lock that represents the entirety of Earth's yearly output. Every shaft, every territory, every gram retrieved from the crust. This single bank's negative position is 8 times that volume. Imagine that. 8 full years of planetary mining output controlled by one entity. Not a group of institutions, not a sovereign state. A lone corporation gambling against the world's most essential metal on a scale that ignores basic logic. Here's the part that actually becomes terrifying. They established this massive liability between 2010 and late 2024, averaging an entry cost of roughly $18.50. But the market isn't hovering at $18 today. The price has shifted violently. Internal projections within this document suggest the bank ES paper deficits have ballooned to nearly $377 billion. Yes, $377 billion. That isn't a clerical error or a sensationalist claim. That is the actual metric their own stability analysts produced. And they designated it, and I am reading this directly, as a primary danger to the firm's existence. Those aren't my dramatic descriptions. Those are the bank's own words in a private report analyzing their own catastrophic exposure. This isn't standard corporate hedging talk. This is a desperate fight for survival. Now, some viewers might wonder, how did this happen? How could the premier lending institution in the United States back themselves into such a lethal corner? Let's examine the background, because when you view the chronology, the present crisis feels inevitable. You recall the events of 2020, surely. The firm settled a record $920 million penalty with federal watchdogs, the heaviest fine ever levied for bullion price manipulation. They were caught in the act of spoofing, which is entering deceptive orders to steer market direction, rigging the silver and gold sectors for a decade. They surrendered the cash. They confessed to the crimes. And then, fundamentally, nothing changed. They maintained their bets. They kept their storage hubs. They continued as the primary market maker, vault keeper, and derivatives clearinghouse on the major exchanges. The entity caught cheating was permitted to continue managing the casino. For 15 years, this bank resided at the very heart of the silver pricing mechanism. They weren't a neutral party or a trustworthy middleman. They were the house, the player with the leverage to suppress prices, the tools to trade at infinite scale, and the political weight to ignore the blowback. But this report indicates that era of control is crashing down, not by their choice, but by absolute necessity. Let me break down the 3 distinct crises that are currently breaking the bank's grip, because while each is severe, their combination is fatal. Crisis 1 involves the federal mandate. On December 30th, 2025, the Primary Commodity Oversight Board convened a secret high-level meeting with the bank's top tier. This wasn't a standard check-in, it was a red alert summit. The regulators cautioned that the bank's negative silver position had become so bloated, it was compromising the safety of the entire exchange. The size wasn't just problematic, it was a systemic fuse waiting to blow. Consequently, they issued an ultimatum: reduce the silver liability by half within 90 days or suffer a forced exit through emergency government powers. 90 days to dump 50%? That translates to roughly 3 billion units of buying pressure by the start of April. Do you realize what that entails in a sector that only harvests 800 million units a year? They are being ordered to acquire nearly 4 years of planetary supply in 90 days. The liquidity is non-existent. The physical metal doesn't exist. Not at these levels. Not even close. Crisis number 2 is the storage vacuum. A private audit finalized on the last day of 2025 discovered that the bank S vaults only held about 380 million units of deliverable bullion. That might sound substantial until you compare it to the debt. Their outstanding promises on upcoming contracts and private agreements total over 1 billion ounces throughout the next 2 quarters. Follow the logic here. Less than 400 million ounces in stock, but over 1 billion ounces promised to buyers. That leaves an 860 million ounce gap. That's more than a full year of global mining that they simply do not possess. The dossier suggests that if they miss these deliveries, the potential costs for litigation, settlements, and fines could exceed $300 billion. They lack the metal. They can't source the metal. And the fallout from failing to deliver is total. Crisis number 3 is the rebellion of the code. Since 2015, the bank has relied on a custom risk software known as Silver V9 to manage its metal ledger. This program smoothed out volatility and consistently signaled that the short-selling strategy was safe year after year. Manageable, the model claimed. Acceptable exposure. But in late December, that same program hit a breaking point. The software now forecasts an 87% chance of a total collapse within 6 months if the liability is not liquidated immediately. The code AS worst case projections see silver skyrocketing past $400 per unit if the exit doesn't start now. Their own software is screaming that their exposure is fatal to the company. Regulatory threats, vault deficits, and a computer mutiny, all hitting simultaneously, all leading to one verdict: exit the trade or perish. Now, I will explain now why exiting this trade is virtually impossible without igniting the exact price fire they are trying to suppress. Silver isn't a bit on a screen. You can't manifest it through a terminal. It isn't a government currency that can be printed at will. It is a physical, limited, industrial, and financial resource. Every single gram was extracted from the earth through expensive, grueling mining work. Global output has stayed flat at roughly 800 million ounces. But here is the vital fact that most analysts ignore. Most of that bullion never hits the public trade. It goes straight to industrial factories under multi-year supply chains, solar manufacturers, electronics giants, medical firms, and defense contractors. The quantity of silver truly available for traders and banks to buy is a minuscule portion of the annual harvest, a few 100 million ounces annually at the very most. In that light, a 6 billion unit short is impossible to settle quietly. There isn't enough unallocated metal in existence. The bank's own data suggests $412 as the managed detonation point. That is the price where the analysts believe enough secondary supply and profit-taking might finally appear to prevent a total market failure. $400. That isn't a guess from a bullion enthusiast. That is the internal bank estimate of the price required for their survival. Their strategy in the memo resembles a clandestine military strike. January involves quiet accumulation through private miners and sovereign funds. Stay hidden. Leave no trace on the public exchanges. February involves controlled futures, purchasing and demanding delivery to tighten supply without causing a mass panic. March is the acceleration phase. Expect massive price swings and soaring lease costs as they buy everything in sight. April is the peak. The federal deadline arrives. They must show a 50% reduction. May and June involve stabilizing the market at a massive new price ceiling. The first steps are meant to look like business as usual. Nothing to worry about. But understand this bank isn't the only one shorting silver. They are the biggest, but they have company. And every high-frequency trader on the street will spot their reversal instantly. Nobody wants to be the last one holding a short position when vaults are empty and the king of shorts becomes the king of buyers. The likely outcome isn't a slow exit, it's a riot. Every hedge fund will rush for the door simultaneously to find physical metal in a world that can provide it. This isn't price growth, this is a detonation. Now, let's look at the other player in this game, because while the US bank panics, another giant has been positioning for years. China. You know they use silver, but do you know they own the market? Beijing controls nearly 70% of the planet's silver refining capacity. Not the mines, the refineries, the specific facilities that transform raw ore into the ultra-pure bullion used by technology companies. Almost every modern application requires this purity, and China owns the gate, but it gets even more intense. On January 1st, China triggered massive new export bans on silver. They are now treating it like a strategic military asset, similar to rare earth metals. Only a handful of licensed firms can export, and only with direct political permission. Why would they do this? Because they need every gram for their own future. Solar power. China produces more panels than every other nation combined. All need silver. Electric vehicles. They lead the world in EV production. All need silver. Electronics. They are the world's assembly line. All need silver. AI, 5G, robotics, and military tech. All hungry for silver, all growing at massive rates. China isn't banning exports to hurt the West. They are doing it because their internal demand is so massive they can spare a single ounce. This is a long-term strategic lock. It means the Western world must find silver elsewhere. But from where? In a market facing multi-year supply gaps, while a major bank tries to buy 6 billion ounces, you can see the vice closing from both ends. The West is forced to buy, the East refuses to sell. This is a first in modern history. Now, let me share something about this metal that almost no one comprehends. This is the key to why there is no alternative, why the value could hit any number, why your current expectations are probably too low. Silver is used in 50,000 different ways. 50,000? That isn't hyperbole, it's a fact. And I'm not talking about shiny coins. I'm talking about scenarios where silver's physical laws make it the only option. Let's look at the traits that make it unique among all elements. Electrical conductivity. Silver is the world's best conductor, period. When efficiency is the only goal, nothing else works. It's in every solar cell, every 5G station, every trading server, and every satellite. Thermal conductivity. It moves heat faster than any other metal. When a chip must stay cool to avoid burning out, silver is the only solution. It's in every high-end processor and LED module. Reflectivity. It bounces light more perfectly than any other substance. Essential for precision optics and solar mirrors. Antimicrobial properties. It kills pathogens on contact. Vital for modern medicine and water filtration. Malleability. It can be stretched into microscopic wires that never snap. This allows for the miniaturization of all modern technology. Let's talk about some specific uses that will shock you. Silver zinc batteries. The Navy uses these for subs and torpedoes. Unlike lithium, they work underwater and in the freezing void of space. Some of these massive batteries require 11,000 ounces of silver per unit. 11,000. That sounds insane until you see the scale of a submarine's power needs. Consider a Tesla pack. Now imagine that density for military systems where failure isn't an option. Missiles, drones, and secure radios all rely on silver for reliable signals in combat. AI hardware. Every server farm running the latest AI models depends on silver-rich circuit boards to handle the massive power load. Every time you ask an AI a question, you are using silver. 5G networks. Every antenna uses silver coating to prevent signal loss at high speeds. Robotics. The joints and sensors of industrial robots need silver's durability to survive millions of movements. Solar energy. This is the monster. Every panel uses silver paste to collect power. There is no cheaper or better way. By 2030, this industry alone will eat 12,000 tons a year. Nuclear power. Control rods often use silver alloys to manage reactions safely, and here is the fact that should scare the short sellers. Unlike oil, which has to be processed into fuel, your silver is already in its final state. That coin in your hand is already industrial grade. It doesn't need a factory. It is ready for a circuit board right now. When the shortage hits, the industry will look at your coins as their raw material. The investment world and the industrial world are fighting for the same limited supply. Let's bring this back to the present. A bank needs 6 billion ounces. Supply is 800 million. China has banned exports. Industry is devouring the rest. Inventories are at 40-year lows. And the bank's own data says $400 is coming. This isn't a theory. This is math. The only question is how quickly the price explodes before the world realizes that paper contracts are not the same as real metal. Let me prove the price on your screen is a lie. The exchange says one price, but try buying it. In Dubai, physical metal costs $50 more than the screen price. Same in London and Tokyo. Why? Because the supply is gone. The link between paper and metal is broken. In a real market, you'd buy on the exchange and sell in Dubai for a profit. But you can't because the exchange has no metal to give you. The system is failing. Paper represents a wish. Physical represents reality. So, what does this mean for you? There are 3 paths. Path 1, you watch and do nothing. In 5 years, you'll tell people you knew it was coming, but you stayed on the sidelines. Path 2, you gamble with high leverage, panic during a small dip, and lose everything. Path 3, you treat this like a professional. You do the work, build a position you can hold, and think in years. Wealth isn't found in paper. It's forged in physical reality. You understand this is a shift in the world's structure. That is how the banks played the game for decades. They weren't in a rush. They moved slowly. They thought about the next generation. That is how you win. Now, I am not a financial consultant. I can't tell you what to buy. But I can show you what the giants are doing. And the biggest giant is being forced to undo 15 years of manipulation under the threat of bankruptcy. You can ignore that, or you can ask what it means for the value of your savings. Silver has been wealth for 5 millennia. Before the dollar or the pound, empires rose and fell, but silver stayed. The word for money and silver are identical in many cultures. That isn't a mistake. It's a lesson. We've lived through a 50-year experiment of unbacked currency and infinite bank credit. That experiment is failing. You can see it in the debt and the inflation. You can see it in the bank's panic. Silver isn't an asset. It's a vote. A vote for reality in a world of paper lies. In 10 years, you will look back. You will either say you acted or you watched. Both choices have a price. The banks have chosen to buy. China has chosen to hoard. The question is, what have you chosen? If this opened your eyes, share this video right now. Send it to one person who needs to see the truth. Most people will be blindsided, but you won't be. Make sure to like and mention Winds of Thought so we can spread this further. Subscribe to Commodity Advisor for more deep dives. Leave a comment saying uncovered if you are ready. The market is at a cliff. The biggest moves happen when no one is looking. Now you are looking. The rest is up to you. I'll see you in the next one. Stay sharp.